As Tim Ross mentioned, the markets are open. So let's get you up to date on all of the numbers and we'll get analysis. First of all, let's take a look at where this corn market opened up. Last night on the overnight trade, we were anywhere from 1/2 to 3/4 of a penny higher in the corn market. And right now we're about that same range. The nearby contract of March up 3/4, 348 1/4. July corn up 1/2 at 364 3/4. Soybeans for the nearby contract here this morning. Well, the soybeans last night on the overnight trade were a little bit higher, but now January beans are down 3/4 at 966 1/2. July soybeans down 3/4 at 998 1/4. For the wheat market, we were 4 cents higher last night on the overnight trade. We're still hanging in there at that same level. March Chicago wheat up 4 1/4 at 422 1/2. March Kansas City wheat is up 4 at 421 1/2. March Minneapolis wheat is up 4 1/2 at 624 1/2. March cotton this morning is up 4 at 75.96, knocking on the door of $76. And DeweyStrickler with AgWatch Market Advisors is on the line with us. Good morning, Dewey. A little bit of strength here in the corn and the wheat market again.
Yeah, that's right. You know, when you look at this week and next week, John, they're probably the two most funkiest weeks of the year because of the fact that we do have light volume because of the holidays. Also, too, we will be looking at end of the month as well as end of the year position squaring by the funds, which could lead to a little bit of erratic trade. And
also a very light trade also. And it seems like the trade's really watching what's going on with the weather forecast now out of South America.
Yeah, that's true. We did have some showers in the central part of Argentina, but it did miss the western section. So that's going to keep things a bit interesting.
What about oversold conditions? Have we been in this oversold kind of category now in this grain for quite some time?
Yeah, we have, especially in the beans. I mean, beans, we only had about 1 day last week in which they were higher. The bean market this morning is showing a little bit of signs of putting in a bottom. The corn market is trying to carve out a bottom. It's just like trying to push a 200 horsepower tractor up a hill right now.
Yeah, exactly right. One of the other things that I have heard mention of that maybe we have found the bottom in the wheat market.
I think that we have. The market has shown some definite signs that we do have a bottom end, and when you really look at all three grains, they tend to put a bottom in about the third week of December and followed by a recovery until about mid part of January. But wheat, which fundamentally is the weakest of these markets, is the one technically or most technically showing some good action here this morning and of days late.
Dewey, you mentioned action in this market, and I want to talk about the grains and as an overall commodity right now. Could we start to see a little bit more action if we would think that the stock market was topping out? The reason I ask that is because we're setting ourselves up today, opening up, 100 points higher here going into the day plus, that maybe we're going to take a run at 25,000 on the stock market, and then where do we go from there? At some point, doesn't that fund money come back to the commodities?
It probably will. We're up a couple of 100 points today just because it looks like we're going to get a tax bill passed here. I thought I would look for the market to top out about 24,300. I still think it'll go up to maybe about 26,000 now. But after we get up there, I'm looking for a pretty hard break. And, I don't mean for any of your listeners their jaws to open, but eventually I look for the stock market to fall to about 6,500. That's not going to happen quick, but the thing is what it will do, it will bring some of the money back into the grains here.
All right. DeweyStrickler here with us. Dewey, I'd like you to hang on. We'll talk about the livestock trade. We're going to do that next here on the Market Day Report. Don't go anywhere. DeweyStrickler is here with us this morning, and now it's time to visit with him a little bit about these livestock markets, and we'll start with the cattle market first, Dewey. First of all, last week was a little bit of a surprise, maybe. Maybe that's too strong of a term, but we had a little bit better cash there late on Friday when we finally ended up trading the rest of the cash cattle trade.
Yeah, that's right. You had your packers finally came in, bid up, and bought some cattle there. I think they're just trying to to get a little inventory in stock here going into after the first of the year. Also, too, you have to remember that since the cattle market peaked up here in the Feb about 132, you had a tremendous amount of fund longs in there. It looks like the funds selling has pretty well run its course now, so we probably can see a little bit of additional recovery in the cattle market.
And some of that's going to depend on this product market, isn't it?
Yeah, it will here. Cash was firmer last week, and like I said, looks like the Packers will try to maybe get a little inventory here to go after the first of the year. So that will probably support the product a little bit.
Any expectations what could be in this cattle on feed report? I haven't seen too many guesses up to this point, or that cold storage report.
Well, no, I don't really have any idea of what we're going to be looking at. I just, when these reports come out, I just let them come out and take them from there.
Exactly. And I know that we're only going to have about 60 minutes, maybe or so, to be able to trade those reports once they come out on Friday.
Yeah, that's exactly right. So, you know, Friday could be a very interesting day in the cattle market.
And break-evens right now, we haven't heard a whole lot about those, but some feedlots, I think, said that they were pretty well positioned going into this because they expected maybe a little bit of a pullback once we come out of that October rally that we saw.
Well, we'll have to see how that pans out.
Exactly. Hog market here. Any thoughts over here, because this hog market continues to just kind of drift along here, and today we've got higher futures.
Yeah, we do. You know, the hog market, I think we're just going to be looking at a trade range here of about $5 to $6. That's what we've seen here since mid-November. I don't see that changing until after we get into the first of the year. So I just look more of a sideward pattern here for a while.
Okay. DeweyStrickler here with us with AgWatch. Dewey, always good to talk to you. Thank you very much. We appreciate the information. Let's start with the live cattle market. And these markets are now open. We'll bring you up to date on all the latest numbers here. And this live cattle market ended the week last week on a higher note. This morning we've got December live cattle up 112, trading at 120.02, and that is just fractionally under the high of 120.15, so not too far away there. February live cattle now up 70 at 121.72, and April fats are up 65 at 122.80. On over to the feeder cattle market, and this market also finished the day last week on Friday on a higher note, and this morning January feeder cattle seeing a little bit of follow through here, 105 higher at 148.80. March feeder cattle up 83 at 146.38. April feeder cattle trading 86 higher at 146.78. For the lean hog market, February hogs up 70 at 69.22. April hogs 73.32, that's up 52. And May hogs up 105 at 78.90 this morning.
All right, thank you very much.